Hi folks, Trisha Curtis, CEO of Petronerds and host of the Petronerds podcast. It is time to get Petronerdy with Petronerds. Today is Saturday, February 22nd, 2025. I had a slight technical snafu on recording a video and intro when I was in Oklahoma this week, but I'm going to get you up to speed in this, and I just recorded the introduction to episode 126 of the Petronerds podcast, and you are going to be completely up to speed on everything that's happening. So right now we are seeing oil prices at $70.25. We're seeing Brent at $74.43. We've seen a little pullback in oil prices. We've seen a massive pullback in the stock market and just a lot of volatility across the map. And so Dutch TTF, we're seeing at $14 and change. That is Dutch TTF, European natural gas prices have really come off from their highs of $17.58 just days ago. And that is all in the back of theoretical moves that natural gas would have if there was a deal between Russia and Ukraine, and if there was a peace deal. And then the thinking is that natural gas would flow from Russia back to Europe. Now, one, I think that's a little bit crazy. And two, that's amazing that European natural gas prices could move that much on something that's that far in the future and theoretical, but that's what it's doing. We're also seeing this pullback in oil prices and a move down a little bit in the 10-year treasury yields as well. And a lot of that is based on these real volatile market concerns that we're seeing in the stock market, where we had retail sales come out and concerns on retail sales, Walmart coming out. I didn't think the Walmart earnings call was that bad, but there was definitely a sell-off, and there's like a desire for the stock market to kind of want it takes a reason to sell off, and then it kind of runs with it. We are also seeing Warren Buffett actually amass a massive cash stockpile, $350 billion, which is way more than he had, actually pre-2008. But if you think about that with where we're at with inflation and what you would have to do with offset, part of that makes sense. A lot of that cash is from his sell-off in Apple, and also him putting that into treasuries. And just when you have that much cash, you're generating a ton of money on even relatively low interest rates. You're generating a ton of money that's just free and clear of, you're not paying a financial advisor for that. You're not paying anything for that, right? You're just getting this return, and it's guaranteed. So, that's all of this is sort of impacting the market and the sentiment, and I feel like there's definitely more of a desire to sort of swing to the negative. And part of this is because you have a lot of talk about the Fed, and you have a lot of talk about Trump policies. So the Federal Reserve has come out in their Fed minutes this past week. They came out was a little concerning because within their Fed minutes, they're openly talking about Trump policies, tariffs, and immigration policies, and what that could mean for inflation. So we did not have that previously. Really, we actually had the Federal Reserve sidestepping talks about, the Biden administration and massive fiscal spending. That's not something they wanted to address. But now you have federal folks addressing guys on the Fed addressing, Trump policies and that have not yet been implemented about how them being potentially inflationary. So you have this concern and consternation in the market. That's definitely a part of it. And I talk about this in the intro of this podcast. I thought that, Secretary Treasury Bessent he was actually part of the first Russian talks which were in Saudi Arabia between the U.S. and Russia. He was actually part of this, and he had a great interview on Bloomberg a few days ago. I encourage you guys to listen to it. But he's really talking about, he says that he's meeting with Jerome Powell once a week, like the former Treasury Secretary was as well. And that he is really talking about, yes, these are the policies of the Trump administration, and folks are concerned about them being inflationary, but really the policies of the Trump administration, especially on energy, are designed to not be inflationary. So they're designed to actually lower inflation and lowering energy prices. So there's just a lot going on within the marketplace. I tried to get all this into the introduction of the podcast of episode 126, which is going to drop on Monday in just a couple days. So please take a listen to episode 125 with Chris Atherton. That's an awesome podcast, awesome conversation. EnergyNet and Efficient Markets. Chris Atherton is the CEO. I was just in Oklahoma talking to them this past week on Thursday, which was really awesome. It's such a great team. They are the sponsor of episode 125. They're the sponsor of episode 126. And huge shout out and thank you to ConocoPhillips for helping with this as well. This podcast, episode 126, in addition to this very deep dive and intro, this is the conversation. This is the presentation and talk that I gave on November 19th in 2024, right after the election, on the economy, on oil prices, and everything. So this is going to get you completely up to speed. I have an hour to go through this in detail for everything going on in the economy post-election and everything going on in U.S. shale too, and what I think is going to happen in that space. So with that, folks, thank you guys so much for listening. Please tune in to the latest podcast, and I'll talk to you soon. Bye.